Providing live finance advice on WMAC since 1993. It's time for Your Money with Steve Rosenberg, Sherri Goss, and Randy Goss. To participate in today's program, call 478-742-0940 with your financial questions or comments. And now live from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning, Middle Georgia. Sherri Goss here, calling in from our loft in downtown Macon as we experience our COVID staycation. How fabulous is this? Not so much. But anyways, I'm glad to be here. If you want to participate in the show because I'm talking on my phone, you can email Randy, R-A-N-D-Y, at rfmoney.com. Any questions or comments that you have. And he says you can even text him if you want. So here's his cell phone number, 954-2498. So feel free to text him, email him. He's sitting right across from me, and he'll relay any questions or comments that you have or anything that you'd like to share. I will hand him the phone. So here's the biggest thing on my mind this morning. And here's the quote. Franklin D. Roosevelt, "The only thing we have to fear is fear itself." You have heard this quote your entire lifetime, but I don't think it's ever been more true than right now. If you want to find something scary, it is very easy to go on the internet or turn on the news or listen to a podcast, and there are plenty of people that will sell you a scary story for free because they know that once you start looking at it, you're not going to be able to look away. And I've talked about this before, but you have a part of your brain called the amygdala that is attracted to, is basically scans the horizon constantly looking for something frightening that you should run away from. And even though we don't need that anymore, because we are not running away from tigers, it's still in us. And so this is why the news will have a catchy heading or a catchy lead-in or something really bad that you're going to have to sit there for 30 minutes and wade through all the other garbage before they tell you what they really were going to tell you 30 minutes ago. They use this to control your mind. They use this to get you engaged so that you hear what they want to spin at you, and you've got to shut it down. It's not healthy. There's nothing good about it. And so when you identify somebody trying to scare you into being afraid of something, you got to really question what is going on behind this. What is the point of their story? What is the point of what my neighbor is telling me? It's very interesting, and it's something that we all have to work through, and it's something that we all deal with every single day. Well, right now, you're dealing with a whole lot of scary stuff. And so let's talk about that right now. The first thing I want to talk about is the market and how not scary it is. But here's the problem. I had a client call this week, and they're so terrified by what they're seeing on TV. They want to go to cash, and they're wondering how much they're going to pay in capital gains tax if they do that in a non-retirement account. So I'm going to come up with that number and share that with them next week, and it's going to probably be huge. So you can't react to what you're seeing on TV and basically determine that that's driving a movement in your portfolio. You've got to detach those two things. So the S&P hit a new high Friday, and the VIX, which is a volatility index, is the same basically as it was a month ago. So how can that be when you have all this insanity going on in the White House? So Jim Cramer had a whole article about this, and he talks about the market rally following the Capitol Hill riot. And he says, when insurrectionists breached the Capitol building and forced it to go into lockdown, Wednesday, stocks soared higher into intraday trading. Why? It was a horrible day for democracy, but was it a horrible day for capitalism? Cramer added that anyone who looked at the events in the nation's capital and decided to sell doesn't understand why stocks go up and down. We keep wanting to put this square into a round peg. Cramer says, when explaining why a divisive day in American history doesn't necessarily lead to a decisive market sell-off. President Trump posted a tweet originally sharing his disappointment in Pence for not voting against the certification of Biden. Then he retweeted urging peace before posting a video. Then, after the video was posted, social media, Twitter, made it so nobody could see it, like it, or retweet it. Facebook removed the video from its platform, as did YouTube. Twitter then removed the video along with 2 tweets and announced that it had locked Trump's account for 12 hours. The company tweeted that Trump would be able to access the account after he deleted the tweets. Facebook announced that Trump will be banned from the platform for the remainder of his time in office. And then Trump released a statement in which he vowed for orderly transition. As the U.S. looks to the future, Kramer once again stressed that the American political future and stock prices are not mutually exclusive. I think everyone wants unity, but a divided country creates a very good stock market. And so you can't look at something scary on TV and assume that it's going to affect your portfolio. Now, there are sectors that will be affected by Biden's policy changes and law changes, of course, just like under Trump. But it won't, as a whole, be reacting to some craziness in D.C. So stocks entered a choppy session at record highs Friday afternoon as investors attempted to gauge the likelihood of additional stimulus out of Washington, which we all knew that was coming, and we all knew that that was going to drive the market up. Then we had a weaker than expected jobs report Friday morning because of shutdowns and cold weather. Places like New York that have said you can only open your restaurant if you serve people outside. Well, I don't know what the temperature is like there now, but I doubt anybody wants to eat outside in New York right now. So those entire industries have been shut down because of our government policy. Markets, more than anything, like clarity. They like certainty. So knowing the results of what the election were yesterday, which is the 5th, knowing what this means for the broader composite of government, it allows markets to price in any potential changes and move forward. And that's from Jack Manley from J.P. Morgan Asset Management. The majorities that we see in both the Senate and the House are about as narrow as they can possibly be. It means that more extreme policy changes are still going to be very difficult to enact, which is a good thing. That's what we want. We want some gridlock. We don't want one party just running willy-nilly out with their checkbook, doing whatever they want. Let me see. The December jobs report showed the first drop in payroll since April. The loss of momentum in the labor market is very clear, and it will continue until COVID restrictions can be eased meaningfully. Depending on the pace of vaccination and the speed of the decline in cases, there suggests no real improvement in the labor market until April, which is why they're going to extend unemployment benefits through roughly that time. And that'll probably be the first thing that he passes. So here's the other thing. Let's take a look at these people that are the swing voters in a split Congress. This is very interesting. So there are 6 names, 3 Democrats and 3 Republicans, who are set to be closely watched. The first one is Joe Manchin. So he's in his second term as senator from West Virginia. He's also the state's former governor. He's repeatedly been elected in his deeply red state. He is against larger stimulus checks, and he's an ally to the energy industry, specifically coal, unsurprising given the importance of the industry in his home state. John Tester, Montana senator, third-generation Montana farmer. He boasted a high rating from the NRA and has been an important voice for the banking industry. He's also been very outspoken about Democratic failures in rural America. Kristen Sinema, I guess that's how you say her last name, Democrat from Arizona, senator, has been the most conservative Democrat in the Senate. Both Manchin and this woman have narrowly voted with Trump's agenda more than they have opposed it. They are a powerful voice on the airline industry. And then you have 3 Republicans to watch: Senator Mitt Romney of Utah, Senator Susan Collins of Maine, and Lisa Murkowski from Alaska. All 3 have long criticized Trump and many of his priorities. These 3 senators joined Manchin and other Democrats during last year's stimulus negotiations. If these senators are able to find more new coalitions with Democrats, they could be crucial in any legislation that ultimately gets to Biden's desk. So it's not a one and done. It's not as simple as certain people won and it's all over. It's more complicated than that. And so take the time to look at all of this from all angles and realize that it isn't going to be Joe Biden going wild with a pen. I mean, he's already said that he's not going to do that in a lot of cases. So markets rallied Wednesday morning after it became clear that Democrats would take control of the Senate. Dow and Russell closed at record highs. Let me see here if there's anything good in this article. Strategists see the early days of the Biden administration focused on one thing, vaccine deployment, and the smoother the rollout, the better. More economic help, which the stimulus package is going to go through, and so the market likes all of that. So what's not to like about that? That's the question. So anyways, no, we're not going to cash. We're not terrified about Biden. We're going to be cautious and we're careful about what sectors we expose our clients to because we actively manage portfolios for our clients. We are fee-based fiduciaries. So we have to make the very best decisions on behalf of our clients. It is absolutely mandatory that we do it, and we have to prove that we do. Every trade that Lou makes, which is our portfolio manager, he has to document so that when we are audited, the auditors can look and see why did we buy this and why did we sell that. We also have to buy for our clients ahead of buying for ourselves. There are very strict rules that we have to follow, and we have to know what we are doing. And so, that's why people come to us, and they're relieved to have us handling it, because in cases like now, when everything looks like it's just going down the rat hole, it's really not. If you're going to give out more stimulus, if you're increasing unemployment benefits again for another 3 months, I think he's talking about doing away, I'll probably get to the article in a minute, with a lot of other things that were going to happen. Yeah, I'll get to that in a minute. But there's a lot of things that are very pro-economy that he plans on doing. Yes, is it a giant throwing money out the window? Yes, so did Trump. So let's just see how this goes and take a deep breath and try not to worry so much, because fear can drive you to make really bad choices, and you don't want to do that. All right, so let's move on. So positive information about Macon came out this week, which I'm shocked. The Macon Cherry Blossom Festival is back on for 2021. It's scheduled for March 19th through the 28th, and actually last night they had First Friday. The art galleries were open for customers. There weren't a lot of people out because it was pretty cold out, but things were open. Things are opening back up. You have to wear a mask. They're not serving food and drinks at the art galleries that I know of, but at least they're opening up and things are starting to try to return to normal. But the cherry blossom being around in March is a huge thing. They said all events will be held outdoors. They'll have a mask mandate because Kemp will probably extend the current declaration. And so a schedule of events has been posted to the festival's website, and the Party in the Park headliner will be announced on January 15th. Tickets go on sale on the festival website on February 5th. Event and vendor applications are available now. I have a couple clients who are vendors. They retired and they started doing woodworking and other fun projects, and they were making so much of these things they decided to become vendors, and they have not been able to go to a craft sale in over a year. And so they've been sitting at home. I'm sure they have just made truckloads of stuff. They make all sorts of wood things and really cool weavings and fabric stuff, and they've got to have like a massive pile in a room somewhere. I know I have a client, she crochets for her church. She makes baby Afghans and baby hats for newborns at the hospital. She's been home crocheting since March. You should see what this woman has cranked out, and she can't donate it anywhere because nobody wants to touch anything yet. And that should come to an end pretty soon. I've got a couple of blankets for the hospital I need to get up there, but I'm sure they're not going to take a bag of blankets right now. But once it opens up, there's going to be a surge of people donating stuff because they finally can. And they've been home making all this stuff. We're going on a year now of just cranking out sewing projects and crocheting and blankets and stuff. So it's going to come. You're going to be able to donate all that stuff and feel really good about what you've accomplished and what you've contributed. I had an email. Let me see what time it is. 9:17. I had an email from a listener a couple weeks ago about UGMA and UTMA custodial accounts, and he was wondering whether he should use one for his grandson to help set some money aside for him. So let me just read this to you. It explains it very well. In most states, minors do not have the right to contract, so cannot own stocks, bonds, mutual funds, annuities, and life insurance policies. In particular, parents cannot simply transfer assets to their minor children, but instead must transfer the assets to a trust. The most common trust for a minor is known as a custodial account, a uniform gift to minors, which is UGMA, or a uniform transfer to minors account, which is UTMA. The Uniform Gift to Minors Act establishes a simple way for a minor to own securities without requiring the services of an attorney to prepare trust documents or the court appointment of a trustee. The terms of the trust are established by a state statute instead of a trust document. The Uniform Transfer to Minors Act is similar, but also allows minors to own other property such as real estate, fine art, patents, royalties, and for the transfer that would incur through an inheritance. To establish a custodial account, the donor must appoint a custodian trustee and provide the name and social security number of the minor. The donor irrevocably gifts the money to the trust. The money then belongs to the minor, but is controlled by the custodian until the minor reaches age of trust termination, which in Georgia is 18. The custodian has the fiduciary responsibility to manage the money in a prudent fashion for the benefit of the minor. Any money in custodial accounts for which you are the custodian will be counted as part of your taxable estate if you are the legal guardian of the child and the child has not yet reached the age of trust termination. The income from a custodial account must be reported on the child's tax return and is taxed at the child's rate subject to the kiddie tax rules. The parent is responsible for filing an income tax return on behalf of the child. Children age 14 and older must sign their own tax returns. Neither the donor nor the custodian can place any restrictions on the use of the money when the minor becomes an adult. At that time, the child can use the money for any purpose whatsoever without requiring permission of the custodian. So there's no guarantee that the child will use the money for his or her education. They could just go buy a Corvette. Since UGMA and UTMA accounts are in the name of a single child, the funds are not transferable to another beneficiary. So impact on student aid eligibility. For financial aid purposes, custodial accounts are considered assets of the student. This means that custodial bank and brokerage accounts have a high impact on financial aid eligibility. However, since 2009 and 10, the treatment of custodial 529 college savings plans has been more favorable. A custodial 529 plan of a dependent student is treated as an asset of the parent on the free application for federal student aid, FAFSA. This means that a custodial 529 college savings plan for a dependent student has a low impact on financial aid eligibility. Thus, one method of dealing with the financial aid impact of a custodial bank or brokerage account is to liquidate the account and transfer the proceeds into a 529 plan account. If money is transferred from an UGMA or UTMA account to a Section 529 plan, the 529 plan should be titled the same as the UGMA or UTMA account. When the child reaches the age of trust termination, the child will become the account owner for the Section 529 plan. The custodian is not permitted to change the beneficiary of the 529 plan because of the responsibility of the custodian to use the assets of the UGMA account for the benefit of the child. That does not terminate when the funds are withdrawn and put into the 529 plan. So make sure you know all the rules before you do any of this stuff. And the other issue with all of this is the 529 plan is designed to pay for higher education expenses. And if it is not used for that and you cash it out, there is a 10% penalty. So make sure you look at this, what you want to do for a grandchild or a child from all angles to make sure you're doing the very best thing. Those other UGMA and UTMA accounts sound easier, but you have no control over what to use the money for. 529 is supposed to be used for education, but they can just cash it out if they don't go to school. So anyways, if you need more information on that, you can email me, Sherri, Sherri, at rfmoney.com, and I'll hang on to that article and scan it and email it to you if you want a copy of it. All righty. So what's going to happen with the rest of Biden's plans? Let's go back to this a little bit. I've covered some of this in the past. I'm just going to run through this really fast. So the House passed a bill at the end of last year for the $2,000 stimulus payment, and Biden is promising this, and so we don't know if it'll be $2,000 minus $600 that already went out or what. And by the way, that money went out this last week. Our daughter called, I think on Wednesday, and said she already had it. I mean, as soon as it was opened up, the money started flowing out. Yet I have a mother-in-law who gets Social Security on direct deposit, and she never received the last stimulus money. And she hasn't received anything from this round either, which is very confusing. It makes absolutely no sense. I also read that they're still sending money to people that are deceased. If you receive a check for a deceased relative, you have to return it. And you can go to the IRS website, and it will tell you, based on the state that you're in, where you have to return that money. You have to return it specifically to a certain IRS tax address so that it can be properly processed. You can't just return it to the main IRS number, because every state has a different place and a different address, and you can find it on IRS.com. All of this stuff used to be on IRS.com/coronavirus, and I believe it's all back there and up and running again. So that's a good website to go to if you have any confusion about stimulus payments. If you didn't get your stimulus payment last year, like my mother-in-law, you need to make sure you write a note to yourself and tell your tax person, because you're going to get a tax credit for the amount that you were supposed to get that you did not receive. Now realize if you're single making over $75,000 or married making over $125,000, the amount you get is phased out, which is easy to figure out what you were supposed to get. But you have to tell your tax preparer so they know to include that in your tax return so that you get credit since you didn't actually receive the money. Very important. If you have aging family members, make sure they understand this, because my mother-in-law had never heard of this and would have missed the boat on the tax credit. So please spread that around in your family and make sure everyone understands that fact. Let me see here. They're going to extend some CARES Act provisions that we had last year. This includes a penalty-free withdrawal for as much as $100,000 from retirement accounts for people whose finances have been negatively affected by COVID-19. So if you want to take a chunk of money out of your TSP, IRA, 401k, or whatever, make sure you look at the rules, because they are very specific about who can legally do this. And if you do it and you weren't really eligible and they audit you, you're going to owe taxes on the entire pile, which is not going to be good. The way that this is set up before, the last time, which is I'm sure it'll be the same iteration this year, is if you took out $100,000, you had 3 years to pay it back and 3 years to pay the taxes, and you had to pay a third of the tax each year. If you put the money back, then you're released from that problem. I don't know why anybody would take a giant chunk out of their IRA or 401k and then have to put it back within a year. Makes no sense to me. If you don't need it, don't do it. Even though you have 3 years to pay the taxes, if you don't need it, why pay taxes? I don't agree. I don't ever want to give the government money before they have to take it, period. So that just creates an opportunity for you to pay taxes early, and it makes no sense. The only time it makes sense is I have some clients that are converting IRA money to Roths, and they want to pay the taxes now, and so they're paying the taxes as they do the conversion every year. And they look at their personal tax rate, and they figure out how much money they can convert without bumping themselves into the next highest bracket. And their plan is to have everything in a Roth by the time they really retire so that it's all tax-free. That's fine as long as you know that that's what you're doing and you're paying those taxes now and it's intentional and you have a plan and you have the money to pay the taxes. That's all fine and good. But just to do something because you can is not a good reason. There's going to be a suspension, they think, of required minimum distributions, just like we had last year, which our clients were so thankful for. We sent out a letter to everybody and said, if you don't want your RMD, let us know. Majority of our clients did not want it, and they were so thankful to not have to take it out because they didn't need the money. They don't want to take it out. They can't go anywhere. I have so many people that retired first quarter last year that they've had to cancel every trip, every vacation, every hotel. They've hardly seen anybody. And it's so frustrating to retire and you saved all this money your whole life and now you can't even go anywhere. Hopefully after first quarter, things will start opening back up once we get the vaccine and some immunity going on. Let me see here. They want to increase the age that you have to start taking withdrawals from your 401ks and IRAs to 75, which I think they should have done the last time. I'm totally for that. People are living longer. They shouldn't be forced to take money out. It's 70 and a half. Now it's 72. So if you're 72 this year, unless they get this plugged through, you'll still have to take an RMD. But if they get this change done, we'll talk about it and make sure you know about it because you don't want to take a distribution if you don't need it. Why pay taxes that you don't have to pay? They also want to change the rules for people and this is really positive, and the only place I've seen this is in this article. They want to change the rules for people who have cumulative retirement account balances of $100,000 or less and permit employers to use 401k matching contributions to help employees repay student loan debt, which already existed last year, but not making people with low balances take RMDs is fantastic. That is what we should be wanting people to save longer. And so I was hoping to see in here that they would also make it if you're a non-spouse beneficiary, because right now, if you're a non-spouse beneficiary of an IRA and you inherit money from that IRA as a non-spouse, you have to take all the money out within 10 years. I think that's ridiculous. They need to reverse that too while they're on this. Biden wants to forgive $10,000 in student loan debt for every American with federal student loans. I am reading that it's very unlikely that he's going to get this done because it would disproportionately help high-income households. And, of course, it would. Who else goes? A majority of the people that go to college are people that have money. And so you're going to help them out. I mean, it's not really going to be the point you were trying to make. So I don't see that going anywhere. So they're going to continue the student loan payment and interest suspension. I'm certain that will get done because he has promised to make that one of his first actions, which helps people that are struggling to make student loan payments. He wants to raise taxes on high-income households, and those are taxpayers with more than $400,000 of taxable income. So that doesn't affect a lot of people. It affects about 1% of the country. He wants to expand the child tax credit as well as tax credit for renters and first-time homebuyers, which we haven't seen for, about 15 years. It's been a long time since we had a tax credit for first-time homebuyers. Halftime. I'm going to finish this article and then I'll do it, okay? Support, this is brand new, support for caregivers of children and the elderly, including a creation of a national paid family and medical leave program to give all workers up to 12 weeks of paid leave a year. That's a lot of money. During their time away from the job, workers could receive at least two-thirds of their paychecks, up to $4,000, so they can better afford to take leave, with low and middle wage workers receiving larger shares of their paychecks. In addition, the plan proposes a tax cut for low-income and middle-class families for the cost of child care up to $8,000 for one child, $16,000 for two, and that's families making between $125,000 and $400,000 would receive a partial credit. Do they really need that? I don't know. It probably depends on where you live. Just seems like a massive throwing money around. Let me see here. He's talking about offering tax deduction for contributions to retirement accounts and instead giving a refundable tax credit, but they don't think he's going to get that through. I've never seen this anywhere else. The Federal Pension Benefit Guaranty Corporation backs pension plans that go insolvent, that fail. And so they have a guarantee up to a certain dollar amount a month that if your pension plan goes bust, that if your business company is covered by the PBGC, that they step in and take over the pension, create a new repayment or a payment program based on the assets, and they can also bail out a pension that doesn't have enough assets. And so it's guaranteeing pensions at a certain level, not the level that your pension actually is, but a level that is sustainable. Well, they've been hit with so many of these in this downturn that they are now having financial problems. And so they want to fix that. I mean, that is a massive amount of money that would be needed because we're facing even more of them this year. Support for small businesses. They want to put $30 billion away for a small business opportunity fund. Would guarantee qualifying businesses receive relief. Discussion of larger loans that would help companies address payroll and cover fixed costs. So lots of money flying around, people. Here's another thing, higher Social Security taxes, because you have to tax somewhere to free up all this money to throw it around, right? So they want to increase taxes on higher income individuals regarding Social Security tax. Because under current law, the 12.4% Social Security tax hits the first $137,000 of wages. Employees pay 2.2. Employers pay the remaining 6.2. Self-employed pay the entire 12.4. He wants to increase that, increase the ceiling that he can tax. And this is the one you're not hearing about anywhere, and this is the one that most concerns me, that is on my radar. Elimination of basis step-up for inherited assets. Under current law, the federal income tax basis of an inherited capital gains asset is stepped up fair market value as of the decedent's date of death. Now, this is, let's say, an individual stock account, property. IRAs are not counted in this because they don't have they don't deal with the cost basis because it's all pre-tax money. It's taxed when the money comes out of the account. So we're talking about inheriting a farm, inheriting land, inheriting a house, or non-retirement accounts that include stock that gets stepped up. So if somebody has an individual account with us, and it contains all these individual stocks that we invest for them, and this person passes away, we have to move that account, that money, into an account in the name of the beneficiary. And at that point, the cost basis is stepped up to the date of death value. So basically, that person who inherits that stock can turn right around and sell all of it and pay nothing in taxes. He doesn't want that to happen. He wants to do away with the step up in cost basis, which would really hurt a lot of people, and not just high-income people. There are some people that are literally able to retire because they inherited an asset and were able to sell it and have that money as part of their retirement cash flow. So we're not talking just wealthy people here. Yeah, they benefit from it too, but average people are inheriting trillions of dollars over the next 10 years from baby boomers. This is not good at all. Let me see. So he would eliminate that, and then he would eliminate, I've never seen this anywhere else, eliminate Section 1031 like-kind exchanges that allow deferral of capital gains tax on swaps of appreciated property. He wants to do away with that. That does not only benefit wealthy people. Let me see here. Under current law, what is this one about? Child independent care tax credits. He wants to increase that. Increase the maximum refundable child credit from $4,000 to $8,000. Let me see. And establish a new credit up to $5,000 for informal caregivers. We've never had that before. So with all of that, I need to take a breath here and go back to who we are and what we do. This is Sherri Goss. I am a certified financial planner with Rosenberg Financial Group. We have offices in Macon and Warner Robins, and the number is 922-8100, or you can email Randy, RANDY, at rfmoney.com if you would like an appointment with Steve, myself, or our newest CFP, Becca Wilton. Anyways, we're all there for you. Our office is open and functioning. Randy and I should be back this week in the office, so that will be great. Look forward to it. So if you want to know more about us, go to retirerelax.com. Check out the website. There's a lot of special reports. One of my favorite ones is about Social Security and understanding how that benefit is created for you, what it's created from, how the numbers work, and then how much you get at full retirement age and how to go online. You've got to go online and open a My Social Security account for yourself on SSA.gov so you can see your statements and your benefits. It's a huge part of your retirement plan, and you need to know ahead of time before you retire how much you're going to get and when you should maybe postpone your retirement date too so you can maximize those benefits. From 62 to 70, those benefits grow 8% a year if you don't take it out. So a lot of people take it out because they think it's going to go away, and there's no way. I just went through how much spending stuff that's happening, so there's no way Social Security is going away. Anyways, that's who we are. Give us a call. Give us an email. If you need help with anything, need advice on anything, we don't charge anything for consultations. They are absolutely free. There is no pressure to do business with us, and we do not sell anything, any insurance product, anything like that. We don't even offer. We offer managed portfolios. We are fiduciary, and we charge a fee for the management of those portfolios. So it's very clean. You know exactly what you're paying, and you see exactly what you're getting. And if you choose down the road that you don't like it anymore and you want to go to cash and put your money back in the bank, we're not going to argue with you. It's your money. If that's what you want to do, then that's what you can do. Okay? So no pressure, seriously. I'm sorry, I got to go down this list. There's more tax credits. Biden wants to set up a $15,000 first-time homebuyer tax credit, which is huge. The last time we had one of these, it was $7,500, and that was huge. I mean, that's a lot of money. Now, there are restrictions to the use of it. The last time they did this, you had to stay in the house at least 3 years. If you sold the house before then, you could not, you would have to pay it back. So you don't want to get in a crack on that. Green energy, he wants to expand tax incentives to reduce carbon emissions, of course, such deductions for emission-reducing investments in residential and commercial buildings and restored credits for buying electric vehicles. And finally, he wants to increase the corporate tax rate to 28%. And I didn't say anything when I did our little halftime stop, but in case you're trying to call into the radio show, I am on that number because I am remotely doing the show from our loft downtown. So anyways, you won't be able to call in, but if you have a question or a comment, you can email Randy, R-A-N-D-Y, at rfmoney.com, or you can text him at 478-954-2498. I had a brain lapse there for 1 second. All righty. Let me see here. He's going to extend the federal student loan penalty-free payment pause. So he's not going to get that done. Let me see. So the next big thing that's rolling out Monday is the PPP, Paycheck Protection Program. And if you went through this before, you can do it again because they're going to be looking at the exact same time frames. And if you missed out last time, you need to call your banker seriously on Monday morning. You've got to get on the list of people that they are going to work with. And this thing rolls out with specific criteria on Monday. This just came out Friday. After expiring last summer, the program is now officially back. Treasury officials announced Friday the program will reopen on January 11th. The program will only be open initially to loan applications from community financial institutions. First-time borrowers will have the ability to apply Monday and Tuesday. So if you missed out, now is your opportunity because they are focused on small businesses and community banks. And hopefully you got a relationship going on with the community bank since the last time you went through this. Now, if you went through this with a big bank and it went fine, great. I'm glad for you. But a lot of people missed the boat because because they were so small and the money went out so quick to all the big guys that a lot of people were left behind. And so they're trying hard this time to make it not so this time. So if you have never applied before and you're using a community bank, call your banker Monday morning, get on the list, and understand the criteria of what it takes to qualify for the Paycheck Protection Program. So repeat followers can begin filing on January 13th. Businesses that wish to access money via other institutions will be able to apply for a loan at some point shortly thereafter. So they're focusing on the small community banks. The program is set to look quite different from the first round. The recently passed stimulus bill includes $900 billion in new relief, including $284 billion for the PPP, which will be combined with about $140 billion that's left over from the last round. Here are the 5 biggest changes to this program. And I understand if you may not be a small business owner and this may not apply to you, but if you are and you're listening, you need to understand what's going down this time. A key change going forward is that businesses must be able to demonstrate at least a 25% drop in revenue over the entire quarter last year. The first round of PPP was kind of by the honor code. What on earth? Oh, that's your phone? Businesses were given the money as quickly as possible because they were still in the middle of the initial lockdowns. This time around, harder numbers will be required on the front end. The new program, so you do not want to take this money if you do not qualify. Please do not apply for this if you're not eligible. The new program will also have a time lapse, probably about a day, between when the application is submitted and when an approval decision is rendered. This is in part so government officials can ensure borrowers are who they say they are. That's pretty important. Restaurants have suffered the most. So on Friday, jobs report found that the food service category lost 372,000 jobs in December alone. Another change to the program is the new cap on loan size. Forgivable loans will be capped at $2 million instead of the $10 million that was before, and the business cannot have more than 300 employees. There's also more focus on underbanked communities, which is great. Let me see. This is crazy. I mentioned this a few weeks ago, and I still can't believe it. The PPP loans, for the purpose of tax filing, will no longer count as income. And the money a business spends using PPP funds is tax deductible. So let's say last time you applied for this money and you used it for payroll for 3 months, like we did at the automotive shop. Now, on our tax return for that shop, we do not have to claim that money as income, and we get to deduct the payroll as if we paid it out of our business account, which seems insane to me, but they've been pushing hard to get this done, and they got it through. Those with a loan of less than $150,000 will be able to have their debt forgiven if the recipient simply fills out a one-page form and attests the funds were used in accordance with PPP guidelines. Once the program is up and running, small businesses will have until March 31st to access the new fund. And I have a cat on my papers. She's very cute, but she's like a giant paperweight, a hairy paperweight. Anyways, thank you, Randy, for clearing the cat. Yeah. Okay, so we just had a call from a listener, and he got a stimulus check for his mom who passed away. This is a huge fail on their part. I don't understand why they had so much time to bump these records up against Social Security, which is notified by beneficiaries and by facilities when somebody passes. I don't know why they couldn't get those records straight this time. It's a big fail from my perspective. But anyways, you need to go to irs.gov and look it up there, because there are specific places where you have to mail that check back. I'm sure you haven't cashed it. It's probably just sitting there in her name, but you have to send it back. You cannot cash it. It's not legit if she's passed away. And if you did cash it and they found out later, then it would be a legal problem because it's not written to you. So go to irs.gov, and it used to be, hey, Randy, can you look this up? irs.gov/coronavirus, because that's the website that they used before, and I believe that is back up and running 100%, because that's where you can look by state, because each state has their own IRS address you have to send that check back to. So I'll get back to that once Randy gets to that website and sees if he can find that on there. It should be, did you receive a check for a deceased person? It should be one of the questions on there. All right, here's another issue that is just really huge. And the article title is Why Financial Literacy Decline May Open Doors to Scams. This is a massive problem, and families have got to step up and step in and protect their relatives who have cognitive decline. So one of the things Americans rarely talk about is cognitive decline and aging, because no one wants to go there. It's a scary place to go, and you don't want to offend anybody. And a lot of times people with cognitive decline have no idea that they have that. They think everything is just normal. So here's a case of how this works and how it can go very badly, and this is an actual client of mine. So my client lost his spouse. While she was alive, everything was fine because she handled all the finances and the bills and the mail and everything. She did everything online. She handled all of it. Well, she got very sick and died within like a 6-month period. It was just horrifying. And after she passed, the husband's cognitive impairment became very evident. And we had his son listed as a trusted contact person in his file. So I contacted his son and I said, you have got to step in. Something is very wrong, and I'm terrified that he may not be paying his bills, that things could be going into disarray. He may not be eating properly, because that's a very common thing that happens. That happened to my dad when he had Alzheimer's. He just stopped eating because he wasn't hungry. His brain was not going, hey, you should eat whether you feel hungry or not. It's like it just was gone. And so he got really sick, and that's what killed him. So it's important. You've got to step in and do something for people that are going through this. That my client, here's what happened to him. So in the early years of becoming clients, husband and wife, they told me about a timeshare they had, and it was horrific. They should never have bought it. It was a really bad deal, and the maintenance fees were going up every year, as you know, if you've ever had one of these things. So they tried to sell it back to the company. The company didn't want it. Maintenance fees kept going up, and so they just finally gave up. They threw up their hands because they couldn't find any relief from it. And I don't know if the people advertising on this station are legit. If they are, if you've used any of them to get rid of your timeshare, I'd really like to know, because I would love to be able to refer people to somebody that actually does what they say they're going to do, and it's not a scam. So So the husband and wife are cruising along. She gets sick. She passes away. He's alone in the house, loses a bunch of weight. He's not eating right. I can tell. He's eating frozen dinners that he gets from the grocery store, which cannot be healthy to live on that all the time. He says that he really can't keep up with the bills. He keeps looking for paperwork and he keeps losing things. And I call the son again, and I said, you got to get over there. Something is not right at all. Well, then finally the son comes to me with the dad to a review appointment, and he says, we got a problem. And I said, what's the problem? You got the website?
More than that. Go ahead.
Okay. And they said, well, we just found out that he has spent $5,000 with 3 different companies that claimed that they would get rid of his timeshare. He mailed them checks up front, and now they won't talk to him, and he can't get his money back. And what should we do? And I said, those companies are likely not even in the United States, and so there's no jurisdiction. I mean, that's the first thing to check out. Where are they based? If they're based in the Bahamas, or not the Bahamas, but if they're based over in Iran or some other European country or some who knows where, you have no jurisdiction. Our government cannot go after those companies. It's a real problem. I've had it before. And so $15,000 just went out the window, and there's nothing they could do about it because they researched it and found out there was no way to touch these people. And that's what these people do. And I'm trying to think of the last place that was a really big scam country, and I just can't think of it right now. But anyways, so those experiencing reduced ability to process information may have trouble doing things like paying bills, reading financial statements, or understanding investments, often more vulnerable to financial and other scams, which have mushroomed during the COVID pandemic. The federal government warns that older Americans are being targeted by a battery of financial scams, including telemarketers offering to do contact tracing for a fee or to reserve a slot for a future vaccine, which is not possible. Others are soliciting donations to charities purportedly helping people in need during the slowdown. This is a direct relationship between declined cognitive ability and diminished financial skills. The other case that I had of a client, she shows up at her dad's house. She was going over to his house 2 nights a week, checking on him and make sure he had food to eat and bringing him food and all of that. And there were all these things on the table, and there were all these receipts from all these companies, not receipts, but letters for companies that said, hey, you've won this amount of money, but you have to send in $25 to get your money. Send in your $25 and we'll send you the $10,000. Well, he had sent over $100,000 to these companies, and she was just sick about it. So she had to shut down his mail from being delivered to him and revert it to her place. And he was upset about it. But you have to do what you have to do to protect people from themselves. So, anyways, what you got, Randy?
Start right here, and then and then you scroll down through here that talks about things to do, and then there's now locations where you can send the check.
Okay, great. So you're on Kiplinger. I was hoping you go to IRS. Really? Oh, brother. So the IRS doesn't have the details. So Randy went to Kiplinger to find out what to do if you get a stimulus check for a deceased person. And the IRS sent nearly 1.1 million stimulus checks, totaling $1.4 billion to dead people, and this was the last time around. You see, IRS says a stimulus payment made to someone who died before receiving it should be returned to the government. The entire payment should be returned unless it was made payable to joint filers and one spouse is still alive. If that's the case, you only need to return the portion of that other person. So if you got, let me see, you can keep what's you're legitimately able to keep and have to send the other back. So you have to write a check. So they say write void on the endorsement section in the back of the check. Mail the voided check immediately to the appropriate IRS location listed below. And so I'm happy to send this to this person that called. Did you get their contact information?
Just ask him to call me back. I'll call him back.
Randy's going to call you back, and he's going to give you this website, okay? But here, yeah, it's right. The links are right in this website. So here's your phone, sweet. Thanks very much for looking that up. Da-da-da. Thank you. All righty. Let's see what we've got. We got another about 8 minutes. This is huge. So there's 2 things that I wanted to get out. So we're driving to the store. I guess we went to the office to pick up the packages and mail and stuff the other day. And there was a huge billboard, black billboard with Humana, get your $50 in free groceries every month. And so I looked it up. It says because food insecurity results in higher rates in chronic conditions leading to increased medical costs and a reduced sense of overall well-being, Humana is offering a healthy food card benefit with some 2020 Medicare Advantage plans in several states. The benefit for qualifying members with dual eligible special needs plans can be used to purchase groceries. You either get a $25 or a $50 a month grocery benefit per month, depending on the plan. So hopefully you've received, if you're on one of these plans, that you've already received this money. If not, you need to contact Humana, but it's for dual eligible special needs plans is what you have to be on with Humana to get the food card. And I don't know anybody that's had that, so I have no idea. The next big thing that's changing are changes to credit scoring. So FICO has a new model that was started last year, and it will be completed this year. They're adjusting how they calculate the three-digit key to your credit worthiness. Consumers who have rising levels of credit card and other debt could see their FICO scores take a hit. But if you already have the above-average score, it may get even healthier. With its new FICO 10 T-score, FICO incorporates trending data, reviewing a consumer's account balance and payment activity on loans and credit cards over the past 24 months. If you steadily pay off debt over time, that has a positive effect on your 10T score. Paying the full balance on your credit card each month is also good for your score. Or if you pay only the minimum for a while and then later bump your minimum payments up, that helps your score. Say that you typically use a small percentage of credit available to you on a credit card, which is a low credit utilization ratio that typically improves your credit score, and pay off the full balance monthly. But then you take a vacation with your card, racking up a big balance and carrying some of that the following month. The 10T score views that event as an anomaly, and it may not harm your score as much as it would under previous models. The use of trended data creates a smoothing effect over such blips. On the flip side, paying off a big chunk of credit card debt to decrease your credit utilization ratio, especially if you take out a personal loan to do it, won't likely give your score as quick a boost as under previous models, and recent late payments may be more heavily penalized. FICO says that the credit card and auto lenders that require a minimum score of 680 may approve about 6% more applicants under the 10T compared with the last scoring system. Lenders are usually slow to take on the new score, so it could be years until FICO 10T is broadly adopted, and the fundamental advice to maintain a strong credit score hasn't changed. Pay your bills on time, keep your credit utilization ratio low, and apply for new credit sparingly. Every 5 years, they update the credit scoring formula, so the next iteration is hitting now. Let me see here. Just a couple minutes. So if you are looking for your stimulus check, go to irs.gov, and there's a Get My Payment tracking tool that they have now turned back on. It was off last week, but now that the payments have gone out, they've already done it, and they've turned it back on. So you can use the Get My Payment to track your IRS stimulus check. The current round of payments should be completed by January 15th, they say. If you're getting a direct deposit, the tool will show when your direct deposit is expected to be made and when it actually was delivered. If you receive the message, payment status not available, you may be ineligible for the stimulus payment. So you can go in there and you can add direct deposit information, and people should have done this last year when they didn't get the last stimulus check. They should have gone in and entered that information manually. And so I would definitely, if you haven't done it, go to irs.gov, click on Get My Payment tracking tool, make sure that put your information in there and see if it's tracking your payment. And if it's not, and it says you don't have a payment, there's a problem, probably with direct deposit. The other problem is if you filed your taxes through H&R Block or some other place that gave you a rapid refund, and your actual refund actually went to H&R Block, they're having the same problem this year as they had last time, in that you can't, if your payment went there, they have to basically send your payment back to the IRS, and then the IRS can resend your payment to you. And so if that's you, you definitely need to go to the Get My Payment tracking tool on irs.gov and enter your direct deposit information to make sure that you get what is supposed to be coming to you. But I'm already hearing complaints about people that are not getting anything. So we're almost done with the show. You have been listening to Your Money on News Talk 940 WMAC. I am Sherri Goss, certified financial planner with Rosenberg Financial Group. We have offices in Macon and Warner Robins. We have 3 certified financial planners, Steve Rosenberg, Becca Wilton, and myself, and we are all there to help you with your retirement plans. Call 922-8100 and schedule a free consultation to go over your retirement plans. We're not going to try to sell you anything, and we'll just look at all the numbers and see if you've missed anything, and if not, yay. If we can help you figure out something, yay. The bottom line is we want you to have a secure and happy retirement and not be stressed out all the time about lack of money. That's the last thing you want when you're retired. I have a lot of people that have picked up part-time jobs in retirement, and that's how they've made it work better so that they don't have to take distributions, and that takes a lot of pressure off, especially if you retire earlier. You also want to look at when to take Social Security. Hopefully you can wait until 70 to take it so that your benefit's much larger than it would be at 62. And with that, the show is over. Have a fantastic week, and thanks so much for listening. Stay safe, Middle Georgia.
The views expressed on the show should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities are offered through Royal Alliance Associates Incorporated, member FINRA and SIPC. Advisory services are offered through Rosenberg Financial Group, a registered investor advisor not affiliated with Royal Alliance Associates Incorporated. Offices are located at 2517 Moody Road, Warner Robins, and 4875 Riverside Drive, Suite 201 in Macon. Phone numbers are 922-8100 and 741-4457.